This is going to be an exciting call tonight. We want to welcome you again to our Thursday night MWR Financial Strategies webinar. Listen, tonight's strategy is one of my favorite topics, folks, the private reserve account. I'm telling you, you want to set yourself free. Take a close look at this thing tonight. If you haven't begun already, you should. So let's get right down to it. My job tonight as your host is to introduce our speaker. I've had the pleasure and privilege of introducing this gentleman several times. You've heard me introduce him, but what he brings to the table is just powerful. I mean, words are not enough to even describe the impact that he's having, but there's a lot of excitement, even more excitement as MWR grows and just moves across the country. You heard all these cities and states that we normally don't hear. So that says a lot about what we're doing. But let me tell you about this gentleman. Now, he spent his life helping others. Now, he's built teams of tens of thousands of people across this country. And, folks, I had the pleasure of witnessing that with my own eyes. Now, he brings 2 decades of success to the financial service industry. The principles that he brings forth are tried, tested, and true. Without question, he's a do-it-first leader. This guy knows how to build big. Now, you're not going to be taught anything on theory. This is all proven, predictable, and profitable. This works, and it works in a big way. So without further ado, help me welcome to the call MWR Financial's President of Leadership and Field Development, Mr. Adamo Tolson. Are you there, sir?
Yes, I am, Gerald. Can you hear me?
Crystal clear. The call is packed out for you, sir. Standing room only.
All right, well, fantastic. Gerald, in fact, we're going to do something a little different today. So if you could stand by, I'm not going to have you stand by for long, but stand by because I want people to hear this strategy that you took advantage of, really to hear your story. And you do it so well. It's always clear, concise. But I want them to understand when I say this is a do-it-first leader, which Mr. Gerald Parker is, he's a consummate professional. He's always here on time on this call. I never have to call and say, Gerald, are you going to start the call? He does it. He is a servant type leader, and he doesn't ask people to do what he won't do. So I love people like that. I love being in business with people like Gerald Parker. He absolutely has been an absolute joy. He gets me excited, and seeing what we have, what our great CEO and founder, Mr. Brian House, has put together, and seeing how it has benefited Mr. Gerald Parker, just taking advantage of what we have. And I want all of you to get to be able to understand what's happened. So as I share this information with you tonight, you'll see the power of what you have before you. This is one of the most unique set of circumstances that I've ever witnessed in business, and I'm so excited to be here. So, Gerald, thank you so much for the introduction. And ladies and gentlemen, what we're going to do tonight is we're going to talk about WealthMAX, which is our wealth generation and education strategies. Now, this is a new format. So if you've come here tonight and you were expecting to be able to really get into and see our Fast Start Success System and see our 6 steps on exactly what we do, where we follow the plan of action, we make a list, we use a phrase that pays, we prove it first, we present it perfectly 100% of the time, and then we follow up and help others, prospects, to get started. Well, what we've done is we put that in a recording because we recognize, and this is by popular demand, there's so many leaders said, hey, when I have somebody get started, I want to immediately have them connect to that instead of waiting till next Thursday. Can we get that where we can have that in our back offices? Can we get that where we can have it 24/7 so when someone gets started, I can immediately let them hear that and they can start following that plan of action right away. They can start those 6 steps. So what we've done is we recorded that where it's going to be up in your back office by Monday, but you know our CEO and our great founder, Mr. Brian House, he gets after it so quickly it won't shock me if it's done tomorrow, but it'll be up there by Monday. Right now you can see it on YouTube, but it will definitely be up in the back office don't have me lie to you, but it's there. It'll be there. So I'm excited about that, and we're going to do that. So what's going to happen with this new format is every Thursday we're going to go over the MWR financial strategies, and we're going to go over them in detail so you understand what it is that you have, you understand the value of you plugging in, and you understand the value of having others on your team plug in, and then getting the word out of this great company, sharing the great news that is MWR Financial. Now, the first Thursday of every month, where our strategy is going to go over the instant pay raise and then our WealthMAX unlimited financial advice on demand strategies. You'll understand that, and it gets into detail. And the great, one of our great, I'm just telling you, I love this guy, Mr. Terrence Hawkins. He leads that. He's done a great job. You'll hear that on the second Tuesday, and I realize I need to speed up because I have some things I want to go over with you tonight. But on the second Tuesday of every month, that's when we'll go over our credit restoration, our credit max, and our equity max, which is our credit restoration and debt elimination strategies by none other than our great CEO and founder, Mr. Brian House. The third Thursday of every month, that's why we're here, is where we'll go over our PRA, our private reserve account, and you'll understand what self-banking is all about. And then on the fourth Thursday of every month, we will go over our land banking, which that's next week. And so you'll definitely want to be a part of that call because you'll want to understand how you can buy real estate without having to write a check. Now, that's a call I'd want to be on and have everybody on that call as well. So make sure you plug into that, but I'm super excited about getting this information to you today. So let's go on and get started. There's some great information I want to share with you, and I'll tell all of you, you want to stay on to the end. You want to stay focused. You want to absolutely have the greatest focus you've ever had right now because you're going to see some things. And some of you have seen me do this before, but you have never seen what I'm going to do today. So you're going to see some things. Let me just say you're going to see a calculator that's going to bring some things home so you understand exactly how to take advantage of what we're doing here. You'll understand this, so you want to stay locked in. This is where you want to focus. You want to manage your distractions, get those out of the way, and be really attentive to what we're doing here so you understand what we have. Now, we start off with the Robert Kiyosaki's cash flow quadrant, talking about the 4 ways to earn income. What I love that we do here at MWR Financial is that we meet people right where they are. So if they're an employee, we help them become self-employed, which is they just start their MWR Financial business. But what's exciting is where most people, they have to stay there since 95% of the population is either employed or self-employed, and they have no leverage. So they're only trading time for money. Well, you don't stop there if you don't want to with MWR Financial. We give you those 6 steps in a proven, predictable, and profitable plan to go out and build a big business, and that's what you do when you become a business owner. You have a big business, and we do that, and we show you how to get that done. And then finally, the I quadrant, which most people, they talk about that as someday maybe down the road in the future at some certain point, I'll be able to make enough money here building this MWR Financial business. Or watch this, you've probably been in other businesses where they've used this cash flow quadrant, and they talk about the I, and they're talking about how much money you're going to make in that business, and then at that time, that someday, that point way out in the future, you'll finally have the ability to have your money making money for you. Well, I'm here to tell you tonight, hashtag this starts today. See, you don't have to wait to that someday way down the road. There are some of you that just joined MWR Financial today. You're on this call. You're an employee. You're saying, I don't have a whole bunch of money in the bank. What am I supposed to do? Can I get started? Or you're telling me I can have my money. What if I don't really have any? How can I get it working for me? Well, then, and I don't have this big $10, $20, $50, $100,000 to start. Guess what? You don't have to. In fact, that's where I want to bring up my good friend, Mr. Gerald Parker. I want you all to hear exactly what he did when he got started with MWR Financial. And when you hear this from a W-2 employee, which is our target market, it's not our only market. Let me just say that. We have a lot of entrepreneurs. We have a lot of business people and people that have no W-2 at all. So I know that we have a lot of people in our business that way. But they all recognize and understand there's 150 million W-2 employees without a business that are out there. So they understand the large size of that marketplace. But Mr. Gerald Parker came in as an employee, took advantage. Now I've seen him go through these cash flow quadrants, so I want you to hear for yourself exactly what happened with him. So Gerald, can you share with everybody what happened for you and why you're so excited about this call tonight, because what they're about to hear?
Oh, yes, sir, absolutely. As I said on the call earlier, Mr. Tolson, this is my favorite topic. This private reserve account is unbelievable. But listen, folks, I just followed the plan of action. I consulted with WealthMAX. I set up the consultation with the CPAs and financial planners. They reviewed my current tax situation, made the adjustments to my W-4, got me back an instant pay raise of $350 a month. Now, keep that number in mind because we're going to come back to that. Now, step 2, I went to WealthMAX and put all the information in, uploaded my credit reports. As a result of that, final completion, 128-point increase in my credit score. I don't have to tell you what that means and what sort of impact that had on my life. But here's the other thing. As a result of my credit score being increased, my insurance premium on my homeowners and my automobiles has decreased by $100 a month. You want to talk about cash flow? Amazing. Listen, WealthMAX was the next step for me. That was the program that's going to help me eliminate debt in record time. I brought into that program with me 15 years worth of remaining debt. That included a small balance on a mortgage. I'm in the process now of paying that debt off in 6.5 years using this system, folks. But here's the most impressive part. The $52,000 in interest that I'm going to save that I otherwise would have paid to my creditors. That's big. But here's the most exciting part, and this is what we're talking about tonight, that WealthMAX consultation. I made that call. These guys started talking about the ability to be, self-banking, private reserve accounts. Never heard of it in my life. But when they showed me what the potential returns could be on this thing and how I actually would have access, unlike my 401k, which had me on a 25-year track to retire, the private reserve from day one put me in a position to retire in 10 years, cut 15 years off of that timetable for me immediately. This thing is outpacing my 401k by 10 times, folks. I've never seen anything like it. But here's the thing. As Adamo said earlier, here's a program that it's designed for the average everyday person. I didn't need $10,000, $15,000, $20,000 to come to the table to get this thing started, to have an opportunity to play this game on this level. The $350 that I saved or from my instant pay raise was what I used to jumpstart my PRA. The $350 that was saved and the instant pay raise got me started, and I've been able to increase my contributions every month since I started because of the growth of my MWR financial business. You talk about exciting. You talk about looking at where I'll be 10 years, 20 years from today as a result of what this thing is doing. And actually just a week or so ago, 2 weeks actually, I've opened my second private reserve account. Listen, Mr. Toast, in the next 20 years, I'll have more money than David Crockett. Man, I've never seen anything like this in my life. Money is making money for me. This is exciting, my friend. I'll give it back to you.
Thank you so much, Gerald. I appreciate that, and I just wanted everybody to be able to hear and be inspired, and hopefully that will inspire you to focus on exactly what we're about to talk about now, because you'll understand and you'll see everything that we laid out. But I wanted you to understand and recognize as we go through this, just keep in mind what Gerald Parker said. He did not have any money to get any sort of thing started, but through the instant pay raise, he was able to jumpstart his private reserve account. So today we are focused on the I, the investor part of the quadrant, where you own investments in your, or we're talking about investments, but I'm just going to talk to you about that I part where you can have your money making money for you. So with that being said, let's go on and go forward here. And let me do this, and then we can go forward. Okay. Now, WealthMAX, which is our wealth generation education strategies, what happens is you get your money making more money for you. See, you have unlimited consultations with real wealth experts. Professionals, think about that, professional analysis to develop the best wealth plan for you and your family, self-banking, which is a private reserve account that you heard Gerald talking about. Well, the setup happens there. It's the best way to save, grow, and protect your money tax-free with no risk of loss. How about that? Land banking, which we'll go into more detail next week on, and that's real estate investing where you're buying land for 20 to 40% below market value and using the same strategies used by the wealthy. That's what we're going to be discussing today. Now let's talk about the 4 cornerstones of a strong financial foundation. Now, number one, if you had your money and you wanted it to do something, you wanted it to grow and make a lot of money, you want to have growth. Absolutely. So that's a cornerstone. But you work way too hard to have any money to be able to put that little bit of money we can put away, so we certainly don't want to lose it, so we want safety. Then what you want is we already pay enough in taxes, so we don't want Uncle Sam putting his greedy hands into all of our money and taking it away. So we want to have tax-free advantages, and so we want to have free access to that money. And that tax-free access. And then finally, we want protection. So if something happens, we want to make sure that our family's protected. Now, with that being said, let's talk about the demographics of life. You know, the greatest retirement crisis in the history of the world is happening right now. And that's Forbes saying it. In the coming decades, they say millions to retire into poverty. In fact, too frail to work or too poor to retire is the new normal. Now, why did this all happen? Well, ladies and gentlemen, let's talk about why this happened. See, back in the 80s, 60% of us still had pensions, and only today, 2016, as of 2016, only 4% had pensions. Let's talk about how that happened. See, when you go back and you look back at what was going on back then, and this is even before that, what happened with pensions is that we went out and we literally built, you had corporate America looking at how many people retiring. Now, just so you understand, since so few have pensions today, a pension meant if you work 20, 30, 40 years to help make somebody's company wealthy, make them wealthy and work for that company, they would say, okay, we'll take care of you for the rest of your life. You'll get this amount of money for the rest of your life. And then if you were with a really, really good company, they would say, well, if you've been married 5 years or more, at least 5 years at your retirement, and you're with your wife, then we'll pay your spouse a certain amount of money for the rest of her life if she outlives you. That's how pensions were set up. But thanks to modern medicine and people living much longer than they ever have, and then when you look at all what was happening in the baby boomer movement that was reshaping everything, corporate America started saying, wait a minute, we can't continue to pay these pensions. We'll go broke. It'll be too much. It'll be a big burden on us. So they went to they went to the government and said, we need some help. So the government, which wants taxes, right? They want tax money. They said, you know what? There's a tax code, and most people don't realize this, but a 401k is simply a tax code. That tax code was for wealthy individuals, generally making $250,000 a year or more, to shield money. And they said, well, what we can do is we can turn this into the 401k. That could be the way people could retire. And we'll make that a qualified plan so people can do that. We're going to give them a tax break up front. We're going to tax them not on the seed. We'll tax them on the harvest later. So we'll do that, and then that way you don't have to be responsible for their retirement any longer. And so when that handshake happened, and it really happened in 1984, then all of a sudden that's where everything went, and we got so conditioned, if you will, to say, hey, get a 401k, because they said you're going to have to help people want to make this change, and the way you're going to do it is match them for every dollar they put in something. So at the time, the companies would put in $1 for every dollar you put in. Really good companies would put in $2 for every dollar you put in. So that made sense. People did it. Today, when people get a job, they say, hey, make sure you get your 401k right away. That's what we've all been conditioned to do. But ladies and gentlemen, let's talk about the truth about money. The ugly truth is that the 401k is a lousy product and a financial flop. Now, I didn't say that. Mr. Brian House didn't say that. MWR Financial didn't say that. Time Magazine said that. In fact, listen to this. They say retirement dreams disappear with a 401k, that trillions of dollars have evaporated from those accounts, a retirement system that has jeopardized the financial security of tens of millions of people. That wasn't done by me. That's 60 Minutes and CBS News said that. Now, is your 401k a total scam? This is what Forbes.com says. They remain as one of the most egregious scams in modern finance, leaving 401k management fees as the last great ripoff in retirement savings. PBS.org Frontline, they said it's the retirement gamble. The 401k system has been a failed experiment for middle-class Americans because it was never designed with them in mind. The whole system needs to be reformed. See, there are three major reasons why this has happened. And the major reasons are, number one, is stock market risk. because a 401k is most of it's tied to the stock market. Number two, there are hidden and excessive costs. Sometimes as much as 30% in fees get eaten up in your 401k. You don't even realize it. And then finally, it's tax risk. So in the future, do you think taxes will be the same, lower, or higher? We all know they're going to be higher, so that's the problem. So let's talk about the retirement gamble, the old way of thinking. The old way of thinking was first use pre-tax dollars to invest in a company-sponsored 401k plan, then contribute as much as possible, and then receive a limited match from your employer. Okay? All this was done so you could fund your retirement and pay taxes later. All right? Now, this book was written about it, The Great Wall Street Retirement Scam. Now, listen to this. That's a post-pension era mindset that has been burned into the American psyche. The question is it possible that this is exactly what we should not be doing? Well, let's look at it. Let's talk about the rules, because they've changed. The new rules of retirement. The rules have changed now, and watch this. You want to save using after-tax dollars and pay taxes on the seed, not the harvest, when you need it most. You want to stay away from your company 401k plan if they do not provide a matching contribution. And you never send any extra money to your 401k above what the company will match. In fact, overfunding your 401k is like playing Russian roulette with your retirement. You should pick up the book Tax-Free Retirement by Patrick Kelly. See, your goal is to grow your money with zero risk, access your retirement dollars tax-free, and create an income tax-free inheritance for your heirs. That's what you're looking to do. Now, let's talk about some investment options. If you invest in a mutual fund, stocks, savings, CDs, bonds, and treasuries, you get taxed right now. If you invest in 401ks, 403bs, IRAs, annuities, fixed and variables, or savings bonds, you get taxed later. But now if you invest in a Roth IRA, but keep in mind it has annual limits, or a PRA, a private reserve account, or other tax-free retirement vehicles, now you get taxed never. See, which one would you choose? I heard a resounding tax never. Okay, well, let's look at this. Let's talk about the old approach versus the new approach for minimizing taxation. And here's the example. There's two 35-year-olds contributing $400 a month for 30 years at 7.5%. One buys a term policy with no living benefits and a 401k with $100 a month that their employer's matching, and it was a 1% management fee. The other buys a private reserve account with living benefits. Now, here's what happens. The old approach, they put $409,000 in their 401k over those 30 years, almost $410,000. They want to have a net income of $52,253 a year. So because they have a 401k, and remember, you're taxed on the seed, you're not taxed on the seed, you're just taxed on the harvest. So you have to take out more money. You have to take out almost $70,000 because you're going to be paying $17,000 in taxes to get to your $52,000. Where the new approach, your PRA would have grown to over $427,000. You want to have an income of $52,000 a year. Well, you just take out the $52,000. There are no taxes to pay on that. Now let's look and see what happens. In 13 years, at the age of 78, on the old approach, the money runs out. The total income you would have received was $591,658. All right? Under the new approach, if, let's say, because you had no stress, you lived a long life, and you died at 100 years old, well, you would receive $52,000 a year for 35 years. That's $1.8 million, and your family will be left with almost $655,000, all income tax-free. This new approach made a 7-figure difference for the same money. Now, let's take it to the next step here. We all remember the crash of 2008. The average loss in 2008 was 38.49%. Why? Because there was market risk. That's why. In fact, let's talk about the effects of risk on your retirement accounts. See, if you started with $100,000 in a bank and you lost 10%, you're left with $90,000. Most of us understand that. But here's what we don't understand. If I ask the average person, what would it take for you to get back to $100,000? You know what they'll tell me? 10%. But it actually takes you 11.1% because you're only getting interest on the 90, not the 100. Now, watch this. If you had a 40% loss, which is pretty much what happened in 2008, that means your account went from 100,000 down to 60. You would need a 66.7% return just to get back to even. And last I checked, banks are giving out not even like right about 1%. How in the world would you ever get back to 66.7%? And that's just getting you even. See, here's what happens. What the wealthy people know that most people don't is this. And this is interesting. According to the Federal Reserve, the richest 10% of Americans own over half of the tax-free investment gains. Think about that. Over half, the richest 10%. Families in the bottom half of the net worth percentiles own just 6.5% of these tax-free assets. See, this is why we do what we do. There are 94% of the people out there have no clue about anything we're talking about tonight, and they need our help. Now, listen to this. Demographics of life. Let's look at it. What happens is generally out of 100 people, and they've done studies and this has happened. I don't care what your education or background, this is it. 1% are wealthy, 4% are financially secure, which means you make $50,000 a year or more, 36% are dead, and 54% are dead broke. See, we can do something about that. It's called your private reserve account. So what kind of life would you like to design? Now, this private reserve account, what I'm letting you know is that when you click on our My Services part of your back office, you can see this video and you can watch it for yourself. It's 2 minutes long. It's fantastic. It'll give you a good overview of exactly what we're talking about now in a very short 2-minute time span. Now, let's talk about the private reserve account, and let's talk about the bank. See, what a bank does is they offer low returns on your money. So if you just put your money in the bank, they're going to give you low returns. Right now it is about 1%, right? They lend money on your money to others. Do they lend it at 1%? No. They lend it at 9, 10, 11%, and that's called arbitrage. Then you must qualify to borrow the money, right? Sure do. You have to pay interest to borrow the money. And then the bank sets the loan terms. We've been there before. And then the dollar serves one purpose, and that is for the bank uses your money to make money for who? The bank. But under a private reserve account, let's look at that. It's market-linked returns on your money, okay? There's no loss provision, which simply means you won't lose any money. There's no qualifying to borrow the money. You earn interest on your borrowed money. So imagine you borrowing money, and then they act like you never touched the money, so you're still gaining interest on it. Now you get arbitrage instead of the bank. Then you get to set the loan terms. And if you were setting the loan terms, what kind of terms did you set for yourself? Okay, tax-free withdrawals, and then the dollar serves multiple purposes. You use your money to make money for you and not the bank. See, this is powerful. So let's talk about the retirement miracle and the 5 reasons to start saving the new way with a PRA. Okay, here's we go. Patrick Kelly wrote this book called The Retirement Miracle. Number 1 is you want safety. So we use START as an acronym, and so S is for safety. A PRA contract guarantees you will never lose money due to market declines. I love that. Number 2, tax-free. The money inside a PRA will grow tax-free and can be withdrawn tax-free. Number 3, the A stands for accelerated living benefits. The PRA contract allows you to access your money when you need it most with no penalties. And number 4, R stands for rate of return. Indexing inside a PRA has historically produced higher returns than most 401k plans. And then finally, number 5, triple compound interest. Interest on the principal, interest on the interest, and interest on the money you saved in taxes. That's what I'm talking about. See, the rules of money have changed, and nowhere is this more true than your retirement. Now, let's talk about safe money indexing strategies so you understand how this all happens. See, what safe money index strategy does, it allows a client to participate in the market upside, but it limits the downside risk. For example, if you start off with $100,000, now keep in mind you're going to see me use like $100,000 because it's real simple for me. Third grade was the best 3 years of my life, so I just keep this simple. But that doesn't mean you have to have $100,000 to start with. Remember, we talked about Gerald Parker. He had no money, but he was able to get an instant pay raise to give him the money to start this process. But here's what happens: the $100,000, let's say it had a market upturn of 8%, they would give you an annual crediting of that 8%. So now your value of your account has grown to $108,000. Okay? Now, if the market had a downturn of 8%, well, now if under just the normal situation, so if you're in the stock market, it went up 8%, great, you're happy. But when it goes down 8%, you lost money. Most people think you only lost the 8% that you gained, the 8,000, but in actuality, it's 8% of the 108. So you lost real money. You're actually upside down right now. So here's what happens, though. With safe money indexing, what happens is zero becomes your hero. Why? Because you get a zero annual crediting, and so then your 108,000 just stays there. You didn't lose it. You didn't gain anything because the market went down, but you didn't lose anything. That's powerful. Then if the market goes up 5%, where everybody else who doesn't have this protection doesn't know about a PRA and things like that, they have never heard of MWR Financial because we haven't told them yet. Well, they see their money go up to $104,000. They're kind of happy about that. But what do we get to see? We get to see ours go to $113,400 because we didn't have to wait for them to catch up. It goes up 5% from where we are. So can you imagine they would need 14.12% return just to catch up? And if they got that, wouldn't we? See, I love this business. I love it. Now, let's talk about the retirement miracle. If you go from 1998 to 2015 and you see this red line represents the S&P 500. And it's kind of like the stock market. It's up and down, up and down. We remember when in the late 90s it went up, and then in the early 2000s it was down, and then it started going up in 2007. It was like unbelievable. Remember, everybody's buying real estate. They just thought, hey, happy days are here again. Then we had the big crash. And then it started going back up in 2011 again. Well, if you had a PRA, this green line, notice how every time the red line went down, it just kind of stayed about the same. Then when the red line started going up, it went up from there. So here's what it's pointing out to. That same 100,000 you would have about a $31,000 difference. About a $31,000 difference. And that's real money and not having the stress of the ups and downs if you had a PRA in this example. That is what's real powerful. Okay, so you have an account that goes up but never goes down. That's what we all want, right? Okay, so here's how to win the money game. Now that you know how to get better value for your money, let's see the impact of savings over time. So let me show you what I mean by that. I'm going to teach everyone. I don't care if you don't learn anything from this, but this one thing, you'll get this forever. It'll help you for the rest of your life. It's called the Rule of 72. If you ever want to know how quickly your money will double, you just take with the 72 and you divide it by your rate of return. So, and that's what I'm saying there. It'll tell you that right there. Now, so if you had a 4% rate of return, and let's say you had at 29 years old, you had $10,000 in the bank, and then by the time you're 65, because if you divide 72 by 4, that means your money is doubling every 18 years. By the time you're 65, that 10,000 will grow to 40. Now, if I ask the average person, what happens if you get 8%? They know how to do math. They go, it'll grow to 80,000. But in actuality, it actually grows to 160,000 because money at 8% doubles every 9 years. See, that it's like, whoa, wait, and did you see how much you earned in that last double? That is powerful, and keep that in mind. Now, of course, if you had 12%, then your money's doubling every 6 years, and that same $10,000 that you never put another dime in, you just let it grow on its own, would have grown to $640,000 with that kind of return. But let's do this. I want you to understand this, because the reason why I point this out is this statement right here by Albert Einstein. He said the most powerful force in the universe is compound interest. The person that understands it will earn it, and the person who doesn't will pay it. Think about this. If you are a company that you say you're a creditor, let's just say whatever company, and you have $4,000 on a credit card, there's a reason why it takes you 43 years to pay it off. But let's just say it's a 10% return, a 10% interest on your credit card. Well, over time, if you're paying the minimum and you're not really ever paying the principal, guess what happens? That money's going to double what? If it's 12%, let's just say it's 12%, it's going to double every 6 years. See, it has its own impact. This is why people stay in debt so long, because they don't understand interest, so they're paying it, but those that understand it will earn it. And what I love about our company here is that we have the experts that help us do this. We don't have to know how to do this. The experts do this for us. They sit down and walk us through it. I love that. And I'm like, man, I love this business. Okay, so let's talk about how to win the money game. I want you to meet Antonio. You're not going to like this guy. You're going to love him. See, Antonio, he has $25,000 in savings at the age of 30. He decides to stop contributing to his 401k and instead sends $500 a month to his new private reserve account. Now, at 45, he elects to receive $20,000 tax-free for 4 years and to send his daughter to college. Okay? We know this is a typical thing. People are going to need this. All right? Then at 65, he stops making contributions and creates his own pension by electing to receive tax-free income of $50,000 a year for the rest of his LIFE. All right, now I want you to watch this. He had put in from 30 to 65, $240,000. But the total he received out, because think about it, he's getting $50,000 a year and watch this, he lived a long time because he had no stress. So he collected $1.8 million, and at his death at age 100, his family collected $1.5 million. See, now, which is the right course of action, the old way or the new way? I believe you all know it is a new way. So let me show you something wealthy people do, how they buy cars and property, real estate, things like that. We'll do it with a car loan. I'll talk about the auto loan. Now, here you see that car, it's $25,000, okay? And you do a traditional loan. Let's say you're paying $471 a month for 60 months. Over that 60 months, you would have paid $3,200 in interest. So when you add the $3,200 to the 25, the total cost of the car was $28,000. Now, keep in mind, you bought this car during the time when the stock market was kind of going down. Remember when we showed that first red line? That's 2000, 2004. But if you had your own PRA and you decided to get a car loan because you're going to borrow from yourself, well, guess what happens? You still pay yourself $471 a month, but you pay it off in 58 months, so you save yourself $942 there. Then because the PRA is linked to the S&P 500, remember we talked about market-linked returns? Well, you earn $3,100 in the growth of your money. And remember when we said your money still grows, you get that arbitrage even though you borrowed it? Well, that's what's happening. So when you take that $3,100 and the $942 you saved, your total difference is $4,043. When you subtract that from the car, you've only paid about $21,000 for the car. That's what wealthy people do. But this is in a down market. Let's talk about an up market, what could potentially happen. Same situation as before, but now your PRA, you're still paying the same $471 per month, just like you would on your normal car payment, but you're now paying it back to yourself. You saved $942 because you paid it off in 58 months instead of 60 months. It was linked to the S&P 500, but this time in an up market, that money grew by $15,000. So when you add those two together, you literally collected over $16,000. So when you add that or subtract that from the car, you literally paid about $9,000 for driving that car and buying that car. About $9,000 because you bought it the way wealthy people buy cars. See, this is the power of what we do, and guess what? You don't have to understand this. You don't have to, figure this out tonight. You can get on the call, do your consultation, schedule a consultation, and the wealth experts will design a plan for you, specific to you. We have experts that do this. Nowhere in our industry does this happen except for right here at MWR Financial. Powerful. So let's talk about those four cornerstones of a strong financial foundation. We talked about growth, and we want that, and that's a yes, yes. We have the safety. We definitely want that as well. We want that free access, and we want the protection. So what I want to do is I want to go over the kind of financial products and see if they have growth, safety, tax advantage access, and protection. Okay? So a protection will come from either a death benefit benefit or a pension kind of environment. So let's look at the kind of accounts you could have. You can, stock market and mutual funds, we know about that. A lot of us have 401ks that are tied to some sort of mutual fund, or you could buy some stocks and things like that. What happens there? When you get growth, absolutely, yes. But if you get safety, and if I see an X, I'm just going to go, ugh, because I don't want X's to show up here, but here's an X. There is no safety. So that's, ugh. Tax advantage access, ugh. Protection, ugh, because they get none of that. Now, 401ks, 403bs, 457s, IRAs, TSPs, some of you right now on the call have some of those things. You have growth, so that's a yes. You have safety? No. You have tax advantage access? There's another no. And protection? Now you go to the Roth IRA, you have growth, great. Safety, tax advantage access, okay, there's yes. We have that, yes. And there's the protection, You go to annuities, like a fixed annuity, growth, safety, yes. Tax advantage access, protection, yes. Okay, variable annuity, you have growth, yes. Safety, tax advantage access, and protection, it depends. You may not have any because it's variable. If the market was up and you did well, then you have protection. If it doesn't, you don't. That's the problem with that. Then you have the indexed annuities. You have growth, yes. You have safety, yes. You have tax advantage access, You have protection, yes. Pretty good. That's a pretty good one. Well, now, life insurance, like a term life, it's just a term. You're buying it for a certain period, so all you get is protection with that. That's a yes. Whole life, there's no growth. Safety, yes. Tax advantage access, yes. Protection, yes. Okay. Universal life, no growth. Safety, yes. Tax advantage access, yes. Death benefit, yes. Variable universal life, growth, yes. Safety, tax advantage access, yes. Protection, well, it depends. If it was up or down, it just depends on how it worked out for you. Okay, so that's what happens there. Now let's talk about the private reserve account. Growth, yes. Safety, yes. Tax advantage access, yes. Protection, yes. See, the private reserve account, it gives you exactly what you want. That's why we love that we do that for people. We do it for you, and we do it for the people you know, and they know, and they know. That's why what we do here at MWR Financial, we are on such a major crusade to make sure we get the word out. We're passionate about getting the word out. If someone doesn't want to hear the word, that's on them, but at least we got the word out. That's why I feel like we have the cure to financial cancer, and I love that we have the ability to do that. So now, I'm going to show you something that you've never seen before. So what I'm going to do, so I don't mess up, I think I can, let me try this. Well, you know what? I don't want to mess up, so I'm going to pause your screen for a moment. So if you see a pause, it's just a pause. I'll come right back. Okay, there we go. You guys should all be able to see this now. Now, here I want you to pay close attention. In fact, let me take a deep breath. I'm going to slow down a little bit because I want you to get this. And I talk fast. I get so excited. I'm so passionate about what we do, but I'm going to slow down here so you get this. Now, this is a calculator. What I love about calculators is liars never figure, but facts are always the truth. Numbers just tell the truth here. So I'm going to say, in a private reserve, remember you heard earlier that person put like $400, so I'm going to use $400 in what we were talking about. $400 a month. If you're putting that away, now think about this. You heard Gerald talk about he had a $350 take-home pay increase, so he used that. You have the average take-home pay increase in America. The national average is between $300 and $600. So we're going to put $400. Notice I'm saying on the lower end. I'm not going to get crazy. It's $400 a month. Now, the average person, let's say when they get to be about 35, kind of mid-30s, they have kind of a family, they want to start thinking about the future. So let's say they said, by the time I'm 70, I'm going to use a long time, I want to have some money under my rocking chair. So we're going to say they're going to go for 35 years putting money away. Now, if they got a return, let's say in the bank, and right now banks don't pay this, but over a 35-year period of time, maybe the average is about a 2% return that they would get. And so if you look at that over time, they would have $243,000 in an account that they put $400 a month in for 35 years and got 2%. Not bad. Now, what happens is, what if they went out and got a 6% return? We know 6 is better than 2, and 6% I'm going to use like mutual funds and stock markets, all the ups and downs and all that stuff, sometimes high, sometimes low, but over time, 35 years, it averages out to about 6%. What would they have? Okay, now your account is growing to $572,000. That's not bad. But let's use this. Let's talk about the PRA, and over time, and it varies. It can be 7, it can be 8, sometimes it's 8, 9, 10, but we're just going to use 8%. I don't want to go up too much higher. Just go at 8%, and we'll calculate this. Ooh, right there, you're right about your $1 million. Now imagine, 70 years old, you have $1 million under your rocking chair because you put that away and you got an 8% return. But here's what I want to do. We forgot one important thing, Uncle Sam. Now, remember when we've heard is that 33% of your income goes to pay taxes, right? Because then that's why we have to finance a lifestyle on the other 33%. Then we wind up paying the banks another third of our money. So I'm going to use a third, and let's see what happens with that. When we start having to pay taxes, whoa, did you see that chunk? They took almost half your money. You were working hard to make that happen, and they literally took almost half your money doing that. So if you were just saving the money and letting taxes, whatever, put in the bank, doing your thing, and you just didn't have any protections, you would literally see you would only have $501,000 because you've been paying taxes over the years, and that's all it would grow to. So forget that almost $1 million when you had $923,000, you're down to 501. But let's say you used like a 401k and things like that, 403b, those kinds of things, that kind of account. Well, it would have grown to $618,000. That's a little better. Okay, that's better. But now, what if you used a PRA? Well, there's your $1 million, almost $1 million back. Isn't that fantastic? See, this is what we do for people. But now I want to show you something, because you heard Mr. Gerald Parker talk about, well, as my business is growing, I'm adding a little more. In fact, I started another PRA account. But let me just show you what a little more can do for you. What if you just added $100 more per month to your PRA? Well, let's calculate it out. If just saving it the way you save it, that would be $627,000 in the bank. And then if you had your 401k, it would grow to $773,000. Okay, but look what happens when you have a PRA. You didn't get close to $1 million. You're over $1 million. 1.1 million is that's those kind of things can look like that. Now, of course, when you sit down with your experts, they develop a plan. They actually have these documents that show you month by month by month what actually happens. They call it illustrations. They just illustrate everything out for you. So you want to definitely do that. Now, here's what I want to show you something. I want you to think about something here. We have a lot of people. In fact, we have Project 1000, where we're going to have 1,000 people earning $600 a month extra on top of their instant pay raise. But if I take an instant pay raise, I'll call it $400 plus I have another $600 in take-home pay, and I'm still working, but I want to see what that will do for me. And I started taking that money because I realized I have a private reserve account that I can have all the things we just talked about. So if I wanted to put $1,000 a month there in that private reserve account, and I did that for 35 years, what would that grow to? Well, just taxing-wise, I would have $1.2 million, so I know I don't want to do that, just not protect myself. If I put it in a 401k, okay, it grows to 1.5. But if I put it in my PRA, that thing could grow to $2.3 million. Do you understand you could be a multi-millionaire given that fact? 35 years, you're just putting away, 70 years old under your rocking chair, there you have it. See, that's the power of what we do. You don't have to give it to Uncle Sam and give it away. Now, something I will tell you, people get real excited about what we do here, and it's exciting. Because one of the first time I ever saw this and heard of a PRA, it blew my mind. I didn't even know this existed. And then to think that 94% of the people in America are walking around out there have no clue it exists. And you know why? Because no one's out there telling them, and they're working every day so hard that they just don't have time to think about anything else. So here's they do. They see this, and they go, wow, this is exciting. I can't even believe it. But then they start to instead of executing, they have to, think about it, and then they go, okay, let me think about it. Let me kind of figure this out, and this is really good. I'm so glad I have this company and this access, and I could do this, but I'm going to do it later. And then that later, with the kids and church activities and other social functions you do, and this happening, and parents aging, and so you're taking care of them, you blink and 5 years went by. 5 years went by in a blink of an eye. And we've all been there before where we're going to do something and we didn't do it, and then we look up and 5 years pass, you're like, oh my goodness. Some of us say, hey, I'm going to go back to school. I'm going to do this. I'm going to lose weight. That's me. 5 years goes by, hey, how did this happen? I'm a little bit bigger. See, it all happens, right? That 5 year blink. So I want to show you what a 5 year blink would do to you. Okay? This is 5 years. This is going to hurt a little, okay? But this is what it does. Woo. Wow. Now, again, the 5 year blink isn't that severe because it's, that's with no protection. But let's go back to the PRA look. A 5 year blink, you just lost over $800,000 in 5 years. And here's the sad thing I'm going to tell you. You can't make that up. There's no way to recover that. That $800,000 is real money that's gone forever. See, time is your friend when you act now. But time is not your friend when you wait, because wait is like a 4-letter word to your money and time. So I just want you guys to know, and again, I'm passionate about this because I know I have a PRA. I know what it can do for you. My kids have PRAs. I tell them that's the most important thing, and I know what it's done for them. So I'm super passionate. You heard Gerald Parker. He is so fired up of what he was able to do, and what I love that we do. See, this is making wealth real. If you've noticed, I have not talked one thing tonight to say you built some huge organization. You have thousands and tens of thousands of people. Okay, somebody on the moderator like that push you back on your phone. Okay, great. So tens of thousands of people. I didn't say you did all of that. I said you were a Gerald Parker, as an example. Now, he's building a big business. He's doing that. But before, he just came in as a W-2 employee, got around his experts. See, one of the things that we look at, if you look at wealthy people, if you look at rich people, you look at entertainers, athletes, what do they all have in common? They all have teams of financial, they're not perfect on money, but they have teams of financial experts. But when I look at middle American, hardworking, the thing that makes this country grow and go, what do we have in common? We don't have them. We take advice from our Johnny, our next-door neighbor, or our Uncle Jimmy, who might know a little bit more. It seems like he's a little bit more successful because he drives a little bit nicer car than we do, and we kind of ask them. But what I love that we did here at MWR Financial is we made access to those financial experts that can clue us in on things like this. We made it real. See, MWR stands for Make Wealth Real, and that's what we do. Now, I'm going to show you something here, because I know some of you are saying, Adamo, that's great, 35 years, 30 years, like Mr. Gerald Parker. He goes, I don't have 35 years. What could I do in 20 years? Well, here's what I want to show you. In 20 years, if you went out and put 20 years, this is what you would need to do. Because I think everybody would be nice if they said, I don't want to work anymore, I'm done working, or I just want to know that I have $1 million under my rocking chair. I just kind of want to know that. So in 20 years, what happens is if you did your PRA and you want to, through your PRA, there's $1 million, $1.1 million. You would need to put $2,000 in an account to do that. Well, I'm going to show you in just a moment how to get to $2,000. It's going to blow your mind how you can do that with building a business here at MWR Financial. Now, some of you might say, well, Adamo, 20 years is cool, but I want to retire before that. I don't have 20 years, or I could be 30 years old and I want to be done in 10 years. What can I do in 10 years? And here's what's incredible. This is what I want to show you. In 10 years, and I'm doing this so you can see the calculator is doing it. We got the tax and everything in there. In 10 years, you can still have $1 million under your rocking chair. Now, that is, you have to have $5,600 a month that you're putting away into your PRA. So you say, well, man, my goodness, how can I put $5,600 a month away in my PRA? That might be all I make right now, or I don't make that much, or I make just a little more. There's no way. Well, guess what? When you're building your business, see, we believe in making big money, but we also believe in saving and investing big money. So let me show you how we get that done. Now, remember we talked about the six-figure guaranteed income strategy, the power of you plus daily guarantee plus your presidential bonuses. So, you do a 12-5-3-2. Remember that? 12-5-3-2 is that your team is 612 QFCs on your team. Your daily guarantee, because you only need 584, you're at $200 a day in daily guaranteed income. So that's $6,000 a month. You would also have another $2,500 a month in your presidential bonuses. So that's $8,500 a month in guaranteed income, which is $102,000 a year for you in guaranteed income. Not to mention, you would have an additional $3,000 per month to pay for your luxury vehicle and or your home, or just to add to your PRA. It's up to you. You earned it. You get it. So this could be $11,500. So I want you to think about something here. Now, some of you might say, well, I have to wait that long. No, watch this. Do you realize if you did a 12-5-2, just that, you could literally look up and see yourself, well, I'll do this. Well, we'll just make it real easy. You had 184 people in your organization. That's 10 who get 10 plus a little. Do you realize that that's $100 a day? You'd have $3,000 a month in guaranteed income? But then on that top of that, you get probably another $500 and if you're doing that, you're at another $500 in a presidential bonus, and you have the first tier on the car bonus with another $500. So you're at $4,000. So imagine saying, because that's extra money, and you don't take the job and shove it yet because you're building a future for yourself, and you're saying, I'm on a 20-year track. I'm going to take $2,000, half of that, and I'm going to put it away in my PRA. See, we're not about just being all flash and no cash and talking about all this big money you're going to make. Because are you going to make big money here at MWR Financial? Absolutely, for those that want to do that. Absolutely, because you're in at the beginning. See, so you are going to do some significant things, but we don't want to be a company of all flash and no cash. See, we're about what is it real? What's real? Real is, hey, I put this $2,000 in my PRA. I talk to my financial expert. They tell me that. I talk to my WealthMAX financial experts on any other decisions I want to make sure I'm making the right decision 100% of the time. I take care of my credit if I need that. I get all my debt eliminated. That's real. So if you're on the moderator side, we hear some background noise. But that's real. See, that's real. That is real. So what we're doing is we're making sure, if I put this $2,000 away and they look at that and they say, hey, I'm at $1 million. They may say it's more than that. They may say it's a little less than that. But they'll tell you exactly what it is because they're the experts. Aren't you glad you don't have to listen to me? You can listen to an expert. Then watch this. If you said, well, I need to get to that 10-year mark. I want to do this in 10 years. How do I get to $5,600? Well, first of all, right here, if you're doing this, you build a big business and you have 612 in your team, you're talking about this is like 11,500. You could maybe you're taking half of that and putting in your PRA. Or imagine if you went out and you had one other person that decided, or let's say you had three other people that decided to do exactly what you did, and they're going to build a big business, and they did 12-5-3-2. Think about that. Just three people in your organization built a 12-5-3-2 with you. Do you understand that would put you in a position where now you're talking about $30,000 plus a whole bunch of money on your in your presidential bonuses, and would it be hard to put $5,600 a month away? See, I want you to recognize and realize that people are doing this every single day. They're working towards this. This can happen for you. Yes, you, that W-2 employee who just got started with MWR Financial today, you can start your PRA. You might only have $100, $200, whatever it is. You can start there and then build a business and let it grow. And how do you build a business? Watch this. Nothing to learn. You don't have to go out and be an expert and learn this and learn that and do what I just said. No. You have me here to do this part. You'll have all the people I told you about on a Thursday. They do their part. But guess what happens? You have experts that you go to. And since your financial situation is like a fingerprint, you want to make sure it's exclusive to you. And you get to do that, and here's what I love about our business. You get to do that independent of anybody here. So, for example, if I brought you in this business, you don't have to tell me about your whole life story, and you don't have to say, I'm embarrassed about this and embarrassed about that. No, you talk to the experts. You deal with the experts. I never know. I just see you happy and healthy, and you're just doing your thing, and I'm excited for you, but I don't know what your personal situation is, and I love that. We never have to sit across the table from someone asking them that. Let the experts do what the experts do, and that's what we have here at MWR Financial. So all you have to do is just go spread the good news that is MWR Financial. And when you spread the good news, guess what they're going to do? They're going to see these things. And can you imagine the person that shared the business, and I don't know who it was, but that shared it with Gerald Parker? How they must feel that he's having this kind of thing where he's taking something he thought he was going to have to work 25 years trying to figure out how he could stay healthy enough at 56 years old to make it another 25 years, and knew that's probably not going to happen. But I got to do that because I have this incredible grandson that is amazing, and I want to do something for him. And that's what he always wanted. But Gerald looked good, smelled good, but he was basically broke on some level. See, people out there are leading quiet lives of desperation. They won't tell you that they're hurting. They won't tell you that they're unsure and they're scared about their future. They won't tell you that at 50 years old, I have no money in the bank. They won't tell you that. I don't really have a real savings, but what they will do is if you show them an opportunity and you bring them to something that makes sense, and real people are tired of lotions, potions, and pantyhose and all this stuff, and all they got to do, they're tired of all that. They want something real. And when you look at MWR Financial, everything we do is real. So I don't have to say here, I'm a truck driver by day and I'm trying to be your financial expert by night. No. I'm a truck driver by day. They took care of me, helped me out. I have these financial experts I can go to. Now you can too. Hey, when I bought my car, I said, hey, you got to talk to my financial expert. Send me the contract. I want to see if it's good for me. And I talked to my finance. Should I buy this car or should I lease it? And if I do, what should I do? How is it going to benefit me in tax-wise and all that? And they tell me all that. Now I know up front. And they say, oh, you know what, that car, you could really shave that down by another $1,200. And I'm like, great. Now I go back because my team helped me, and I buy the car the right way that's good for me. Should I start a corporation or not? I don't know. Well, I don't even know what kind. Let the experts tell you. You don't have to ask and be figured out, and there's no do-it-yourself here. The experts do the work for you. That's what's so powerful about what we do. So, ladies and gentlemen, we focused on the I today. So I don't care if you're in the E or you're in the S quadrant right now. All of us we can focus, and we can build a big business. Because that's what we do. We help and share the message and have other people want to share the message as well. And it is you don't never know. You could be one recruit away from an absolute explosion because somebody got passionate and excited. And they're saying, I'm serious about this. I'm getting ready to build my 12-5-3-2, and I'm not playing it. I'm going to put my $5,600 a month away because although I'm only 38 years old, per se, it's not me, but if I was 38 years old and I don't want to work at 50. So I'm going to see how they can put me in a position where I don't have to. So I'm going to go build this. I'm going to build this business in a big way. But what we did tonight, ladies and gentlemen, we focused on the I, and we make the I real here at MWR Financial. Next week, you don't want to miss this call. You want to get everybody on the call next week because we're going to talk to you about how you can buy real estate without even having to write a check for it. Can you believe that? That's what we do here at MWR Financial. Where else can you go to get this done for you? That's why there is not a business that can touch us on the planet. They can say, oh, you can make all this money, oh, you can make it real fast and all that, but we are built to last. See, you don't have to worry about, is this going to go somewhere? This is what we do. We stay in our lane, and that's all we do. That's why I'm so proud of what we do. So I'm telling you, I truly believe that if the promise is made clear, then the price you pay to get there is easy. And at MWR Financial, we make the promise crystal clear. So if you want to go out and drive the car you want, live in the home you want, live your dream home, go on dream vacations in some of the most exotic places on planet Earth, or you simply want to spend time with who you want, when you want, where you want, for however long you want, then all you have to do is dream big, aim high, and you'll have a chance to live free. With that being said, ladies and gentlemen, the time is right now. All you have to do tonight, you can schedule your consultations and then start setting it all up so you can talk about your PRA. It's there. You can take control of your financial future today. I love that we have that ability, and the experts are doing it for us. So here's what I'm going to tell you. When we go out and do what we're supposed to do, and we go out and take control of our own selves and let the experts help us every step of the way, do you know that we not only know we're going to see you at the top, and we're going to see you on the beaches of the world, because we know we're going to do that. Where people are the guaranteed income. Think about it. We're home of the instant pay raise and guaranteed income. But you know where else we know we're going to see you? We're going to see you at the bank. And I want you to know something. At the NWR Financial Bank, which are our PRAs in mind, they won't just count our money. They'll weigh it. Have a great evening. I'm going to say goodbye for now.
Like I say, the hands of the powerful call.
Night, great call.
Hey, Arizona.